Prashant Jain of HDFC Asset Management, however, believes that this period of consolidation will not last very long. Sunil Singhania, head equity of Reliance Mutual Fund, advises investors to make the best of this correction and look at opportunities in the financial space.
We have had a very long period of consolidation. In Jan 2008, Sensex was 21,000. Today you are at 25,000. So 8 years, 20% returns. So I think the market cap to GDP of India has corrected to near all-time lows. So currently the market cap to GDP of India is at 60%, which was experienced at the peak of the Lehman crisis, at the bottom of the markets. So there is no crisis today, but your market cap to GDP is touching crisis levels. So I think fundamentally Indian markets are undervalued, and how long this period of consolidation will last, I don't think anyone can give you a correct answer. But I don't think it will be too long. Last 2 decades have seen several global events like 9/11, like Pokhran tests, like Asian crisis, like Greek crisis, like pigs. But India has withstood its ground, and these flows, while they do get disrupted for few months or few quarters here or there, but fundamentally I think the growth gap between India and the rest of the world is expanding. And that's why the FII ownership of India keeps on rising. The only 2 years where foreigners did not invest in India was one, the year of Lehman crisis, which was of a very different magnitude. And the second was the year of the Pokhran blasts, when US imposed some sanctions on us. So I don't think this changes much for India.
Clearly, with the world where it is, I think it would make more and more sense to shift focus towards the domestic economy. We shifted a little bit of tilt towards niche financials. So, select NBFCs, wealth management, insurance, AMCs. I think that is one focus area. We believe that India is a land of savings, and increasingly savings are moving away from hard savings or, real estate and gold towards financial savings. I think there are some smaller PSU banks which will continuously need capital, which are under more stress. There is an uncertainty towards their merger. So I think even within the PSU banks, one has to be more, bank specific rather than classify them as one basket. House view has been that structurally, public sector banks are losing their competitiveness. But in the near term, a few large public sector banks, because of valuation play, might be a sort of a tactical play.